members of the faculty, distinguished members of the adjunct faculty, researchers, students, friends from the banking industry, and ladies and gentlemen. First of all, let me thank Mr. Samamurthy for having me here today. He said I readily accepted, and I know what this institution has done for the banking industry, and I was not going to say no, knowing that, and I will share some of that as we go along, and share maybe the role from a banker's eye that this institution has played in transforming the banking sector, and indeed transforming economy. But first of all, compliments on 16 years of accomplishment and 16 years of changing focus, and some early focus, and thereafter as things have evolved, I think focus, as you said, was articulated by Professor Rangarajan. I think very appropriate indeed, because as time passes and the economy transits and banking transits, you need to evolve too, and I think this is part of that evolution process. But it's a very interesting blend of 2 or 3 things being done simultaneously in this institution, and I must compliment this institution for this unique character in handling all these things simultaneously and delivering value, and the role that the leadership has played and the faculty has played in this through this period and in the last few years. I think it's indeed something that the banking industry should acknowledge and compliment. I was visiting a bank branch before I came here, and I think I'll start with that example. It's not part of my presentation, but it strikes me as something that has happened as a consequence of the work that this institution has been doing for the last 16 years. So I went into this branch and I said, what are the number of footfalls in this branch? And it's one of the first metrics that I asked. They said 600 footfalls. I said, what were the footfalls 3 years back? And broadly, I know that the average footfall in an ICICI Bank branch 3 years back would have been around, branch of this size, around 1,200 to 1,500. So it was around 1,200 was the footfall, down to 600. So, if you think for a moment, why does this branch have only 600 footfalls against 1,200 just a few years earlier? This is one of the busiest branches in Hyderabad. I remember coming to an Hyderabad branch a few years back, and people, literally on each other's shoulders trying to get to that desk. Nothing like that, no hurry. Hardly 2 people in the waiting line, sitting actually, not waiting line for service, and so on. What has made this possible? Simply put, I can go on and on talking about this, but simply put, it is the progress of technology. It is the progress of what, and the translation of what this institution has done or started doing 16 years back that you see actually at the front end of a bank branch. And I'll explain that too as to what is happening. Basically, payments, 60% of the footfalls in a branch were for cash transactions, come in, deposit cash, withdraw cash, and so on. And typically, these were your customers' representatives. Small businesses would send their representatives once to check what was the balance in his account, second time maybe to check whether a check that was deposited has cleared or not, third time maybe to deposit money, fourth time to withdraw money. Not all transactions the same day, but one or the other, or maybe 2 of them happening on the same day, adds to the footfall. Now, over the last few years, each of these transactions, the 4 things that I described, have gone on to an electronic mode. And as each one of them has gone on to an electronic mode, work done by this institution has had a role in getting that transaction off the branch and into a domain which is easily today, in today's context, usable and tackleable by this customer of ours. And that has meant that the way banks look at the branch, what is it that you could provide out of the branch, all these things make a complete change. And indeed, the way you approach technology then changes completely. I would dare say that if the pioneering work done on the switch, going back to 16 years and thereafter, if this was not in place, there is no way that a bank like ours would have been anywhere near the size and scope that it is today, for a very simple reason. We started off with 25 or 30 branches. In 1996, when I came into the bank, we had maybe 100 branches. So there was no way that we could have grown to the scale and size that we have without using technology. And in that, the ATM became the first, I would say, the foundation for all the things that we later on did in technology. So again, I salute this institution for all the work it has done, and will, I'm sure, continue to do in a variety of ways in the coming years. What I will, in a formal way today for the next 25-30 minutes talk on is what is the role that technology has played in this bringing about this disruptive change in banking. Very quick snapshot of the transformation that's taking place in India, because this has implications for banks, and then moving on to what I see as the future of banking. Again, clearly, banking sector in India, after somewhat of a slow start up to 95, 96, I think thereafter managed to adapt technology as technology evolved. And as I would say, hardware costs dropped, the banking sector in India became, I would say, quick adapters of technology. We ourselves could never have afforded a mainframe, but technology disrupted the mainframe, which came on the scene starting maybe in the 90s, which were scalable and which you thought that you could grow with as you grew. I think made a lot of us early adopters, and the rest of the banks very quickly followed suit. So you have, as a consequence, improved operational efficiency, cost reduction, high speed and straight through processing, and data capture and data mining. Now, some of these areas are clearly work in process. Sambamurthy and I were having a chat before coming in here. I think all the work that you would do in the areas, last area there, in terms of data, management of data, using it as a relationship tool, as a sales tool, as a tool for fraud control, and a whole lot of areas that you could use that. I think that is work in process. Items on the left side have, I think, started to kick in, but as you move towards the right of that, those 4 boxes, there's a whole lot of work in process there for all of us. And of course, through all this, we aimed at improving the customer experience, and of course, improving internal efficiency. Again, I think the period 96-2000 was when you were experimenting with things. Things were not robust enough to take a call on how you would evolve. But I think post-2000, and particularly with the advent of retail banking, I think the use of technology as a core foundation for everything that you do in a bank, I think became very clear. Of course, by then you had a large number of foreign banks which are also trying to experiment with technology. I think universal banking became something that was acknowledged. Again, to define universal banking, I would say at that point in time what we had in mind was a bank which had presence in all areas of banking, rather than in just a few verticals or just a few areas of banking, and if possible, a bank which had other areas of financial services also, something that it provided its customers. And then you had, of course, banks and non-banks competing to serve similar customer needs, the whole NBFC growth that happened. And underlying all this, technology-driven innovation in products and access to services. That whole paradigm started to change in 2000. And I remember around 2000, when there must have been just a few hundred ATMs in the country, we said we will, with the work done by this institution and the switch that was there, we have confidence to now roll out 1,000 ATMs in 1 year. And I can tell you and share with you the sort of challenges we had. 3 levels of redundancy. So you had a dial-up line, you had a leased line, and you had a VSAT to make sure that the ATM worked. Making sure that the power connectivity was available so that you didn't have the ATM going down. On and so I think early stages of technology coming in, and you're trying to grapple, be hands-on. And you look back, it's just 10, 12 years. It's not as if we are talking of 50 years back. So the revolution in technology has happened over a very short period of time at what I'd call a dramatic pace, and embraced by the customer also at a dramatic pace. Because 10 years back, we did not think customers would embrace technology the way they have. And of course, as we move along, you now have the whole focus shifting to inclusive banking. Just some signposts, RTGS 2004, NEFT 2005, the Interbank Mobile Payment System 2010, installed base of ATMs 100,000 from just about 1,000 10 years back or 11 years back, and POS terminals over 700,000. I'm sure POS terminals as well as ATMs will grow much faster than the compounded growth that we have seen in the past. As I would say, the cost of technology drops and connectivity becomes a given. And this is, to me, the way transactions have moved in terms of what has happened over the last 10 years. Pure and simple technology and the impact of technology. In 2000, 94% of our customers actually transacted only at the branch. There was no other way that the customer could transact with us. And today, that transaction, the number of transactions that happen through a bank branch is down to 12%. The ATM grew from 3% of transactions to 41%. The internet, and I would say the internet, point of sale terminal and the ATM, if you look at these three areas, you're talking of over 85% of transactions happening on these three areas, which virtually did not exist 10 years back. Now, two things are important to note here. One is that the banks did roll this out. This number is for ICICI Bank, but give or take a few percentage points, I don't think it is vastly different for most banks today. One is the platform was made available. The architecture was made available. An environment was created. And thereafter, the banks rolled out technology. Most importantly, to me, the customer accepted technology rollout. And again, I like to say that the customer is not behind the curve. We tend to believe that customer is behind the curve. Customer is not behind the curve. That is my 15 years of experience in this business tells me the customer, if at all, is ahead of the curve. And whatever you throw at the customer in terms of efficiency improvement, his ability to transact efficiently, that's what I mean by efficiency improvement, customer is willing to absorb. And I think the result is clearly here. And this clearly also points out where we are heading for as we go along in our own journey in the coming years as we embrace other challenges. To me, technology continues to be in a state of flux. Technology is not at equilibrium. In fact, I would say that technology is today in more of a flux than, as I can see, at any point of time before, I would use a cutoff, the advent of the graphic interface. I think the advent of graphic interface, the advent of maybe three simple tools, SuperCalc or whatever was the equivalent of a spreadsheet, WordPerfect or whatever was the equivalent of a writing program, and a database management program, whichever. I'm talking of circa 1980. At that point in time, you had, I would say, control passing from the back room. The back room is an IT setup which is completely opaque to the front room. The front room is basically the business. And each had no way to talk to each other at on a common language because technology did not allow you to. And I think 1980s we had the ability whereby we demystified what was happening at the back and at the front, and control in a way got shared in terms of what you were doing for your organization or for your customer. That was, as I said, mid-80s, and then a whole lot of progress has happened. To me, that was seminal. I think the same thing is happening again today in a bigger way, because connectivity has made all this ubiquitous. The device that you carry in your pocket today, which would have the same power as a mainframe would have had 30, 40 years back, has made it possible. The whole, I would put it under quotes, the app world, as it were. I don't necessarily mean apps that you buy from the app store, but I would use it in a broader context. Everything that can be reduced to an app, which then you as a business in an organization can play around with, or your customer out there in the field can play around with, I think is today becoming more, I'd say, is growing and is disrupting the way we looked at things just a few years back. And of course, if you want to put it in context, all you have to think of is Windows 8 and whatever was the prior version of Windows. The sort of shift that has taken and what this will do to us as not lay users, but as corporate users, and our customers as lay users, because you will then have the ability to access this technology on various platforms, not will have, you have today, ability to access this technology on various platforms. I think things will change dramatically. Clearly, this brought along a higher capacity and processing capability, software to run devices, ability to connect through broadband and wireless, as I mentioned, mobility, new platforms, and the ecosystem of handheld devices. I think these are new platforms such as for payments are now challenging the traditional bank channels. And I think the numbers already say it. It is only a question of how we will acknowledge it and how will we grow. I think the next wave, I think, is where we will see a large mass in the world getting connected. So you're looking at 2.25 billion people, 32% of the world population, which is online today, of which 1.1 billion are already 3G users. And the mobile internet is ramping up dramatically. I think the next bullet came as a surprise to me, and I'm sure is a surprise to most of the people. The second sub-bullet under the second bullet, 39 million 3G users, basically got onto the net last year using a handheld device, and that represented a growth of 840%. So you're probably looking at something like 3 million, 3.5 million customers the previous year who were online using a handheld device, and suddenly you've got 39 million users. This is the figure for India. And I dare say that that number easily will cross 100 million this year. The very next year, we will cross 100 million in terms of customers who will access the net. What is driving this? See, the first year number, this is when it's really year one of the 3G rollout. So 3G rollout is still not fully happened, is still not robust, but you had people literally jumping on to the platform. The device cost is down, the connectivity cost is down, connectivity is more robust, and we are creating applications, I'm talking about the banks just now, which the user can use on his or her handheld device. So for us, it is a path forward. This is the national number, and as device costs drop further, the device becomes, I would say, cost effective, and the device becomes something that is affordable to all lay people in India, and that's why I say the number is going to accelerate. If 100 million people are added this year, and that's my guess, as I said, that would mean that in 1 year's time, a majority of people transacting on the net, almost 60% of the people who are connected to the net, are getting on the net using a handheld device. And then I will fast forward later on what that means to us in the banking business. A dramatic shift in the way our customer will have the ability to transact with us. And of course, out of 1.8 billion mobile users in China and India, 1 billion will go online in 2 years. So exciting times in the next 2 years in terms of what that handheld device will do to you. Of course, we in India have the third largest internet user base and the second largest mobile subscriber base. 100 million internet users, that's where I said 40 million today are on the net. Next year, I assume that 100 million will go to maybe 160 million, with more than 100 million through the handheld device. Broadband connectivity clearly is a catalyst. Consumers are becoming part of the cloud seamlessly without consciously realizing it. I don't think a year down the line, anybody will use the phrase cloud. I think we are going to be all part of the cloud. That is the ecosystem. So we're not going to point out we are on the cloud. We are, by and large, we are already on the cloud. So the cloud, I think, is the phrase cloud is on its last legs, because we will all be enveloped by it in any case, seamlessly without, as I said, consciously realizing it. Device costs will continue to drop, And capabilities on whether the device or the banks pushing technology through the device, or for that matter, any other company doing business, using these modern platforms, will push more and more capabilities through the connectivity that is available and the device that all of us will have in our pockets. And this, indeed, in the banking context, will have a significant impact in what I think is a transforming India. And I want to share maybe next 2 or 3 slides what I think is happening in India, just to put the opportunity context, not to talk of an economic treatise, but basically what is happening in India. And I use always China as an example, because at times we tend to tell ourselves that, oh, we are so far behind China, and I say, let's do a reality check. We are not that far behind China. And the next question is, people ask is, will we catch up with China? I'd say that we are not likely to catch up with China, but probably will stay where we are in the context of where we are behind China. And that, to me, is a scope for a whole lot of growth and opportunity, and that's the opportunity we will seek. But what is, to me, remarkable is that we are where China was in 2003. The top, the dotted circle, if you see. GDP of 1.6 trillion, per capita 1260 or 1270 on a population of 1.29 billion. 2010 India, GDP of 1.6 trillion, per capita $1,342, population 1.19 billion. Not too different if you look back 7 years. And then we have, I won't bore you, but we have tried to analyze this number in various other contexts, physical output of various things, infrastructure, and so on and so forth. There are differences, but I think all differences can be explained to, I think, the growth paradigms that were different in these 2 countries. One is export-led, the other one has been services-led and driven internally rather than an export mindset. So your production of steel, your production of cement, the infrastructure that you need is all different. But anyway, that's not the idea. The idea was just to say that we have a benchmark, we can track where we are, we can see the development that's taken place in a third country, we know what we can do in technology, and then I think we can, for that reason, keep pace. But clearly, by 2030, and that's the sort of mindset that we in the banking business, and for that matter, any business ought to have, where would we be? And I thought I'll use one metric, that is how large will be some of our cities. And you track down to Delhi, Delhi will be almost in terms of GDP the size of Thailand. And again, very clearly, I have Mumbai before that. Mumbai will be bigger than countries like Denmark, Thailand, Portugal et al. And you would have, I would say 4 or 5 cities there, including, I think I put Hyderabad, which would be bigger than several countries in the world. What I'm saying is that we need to prepare ourselves for this sort of an India as we go along. And we need to make sure that we are able to meet the aspirations of what I would call a resurgent India, and within that, particularly a resurgent rural India. Because this growth will also be, in a way, channeled and driven by 700 million people living in 600,000 villages. And very interestingly, we will talk about that a little later. This is what I call, the challenge of banking the unbanked. So you have a challenge, and it's, I think, a challenge that we will all thrive on, which will be very interesting to take on. We are taking it on, trying to reach financial services to 700 million people in 600,000 villages. And of course, rural growth is supported by a flux that is taking place in rural India itself in terms of what is the mix of the rural economy. Traditionally, it was agriculture, and we still have this mindset to say, oh, what has happened to the monsoon and what will happen to rural India. But I think rural India is moving on. The share of agriculture, I'm not for a moment saying agriculture is not important. The share of agriculture in that pie is dropping. Other things are replacing, pure agriculture as drivers of rural India. So there is a huge amount of change that is happening in the mix of rural economy. And of course, rising wealth creation with an estimate of 40 million middle and high income households by 2010. The bars below show the mix change that is happening in terms of the economy is very apparent. I don't need to go through that. If I then try to project our own growth, and I was a little optimistic in projecting the growth in the 2012, 2017, 2018, 2021 period. We would have used probably 8 or 9% growth. The question marks whether we would be there again. I don't want to go down that path. I believe if we pull up our socks and get our act right, we can be on track, and we should look at GDP exiting 2017 probably nearer 2,500 than where we are today, and on the same look at conservatively by 2021 4,000 at the exit point. This assumes growth rate significantly lower than today, but not lower than in the past 10 years, but not exactly at what is being debated today. Is it 5%? It is 6%? It is higher than that. But I am reasonably sure that this will happen, because growth is like, once you let it happen, it's like a catalytic reaction. It's very difficult to stop it. So we will see growth happening. A few things that we have to get right. I think those things are getting right. And again, we don't have the time. Otherwise, I would have taken you through the aggregates, which I try to watch and see whether how well are we doing, and have things transformed or not. Because at times we tend to believe that nothing has happened, but a whole lot of things have happened in the last 15 years. I started off by saying how much has happened. 94% footfalls in the branch to do transactions down to 12%. That has happened, and a whole lot of things beyond that have happened also. So all this leads me to what is the future of Indian banking as we go along. So clearly, if you look at the technology for the masses and banking services, the reach, then you need to look at other financial services, the reach, the opportunities and the challenge and the opportunity. I would say the opportunity is significantly more in other areas than in, I would say, bread and butter banking. Bread and butter banking, probably 59% of households have access to bread and butter banking. 10% have life insurance, less than 1% have general insurance, 2% have a credit card, and only 13% out of that fairly large number of households with the accounts. I would, of course, love that number to be 100%. Only 13% have an ATM card. So opportunity, opportunity, opportunity as I see. But the challenge is that within this opportunity, you need to take banking to 700 million people in 600,000 villages in 600 districts, banking the unbanked as that opportunity. Channel innovation clearly is what we will need to do, and we will see. I have no doubt that all these things will happen. These things will happen. We need to put it in context. So you have smart cards, which will for opening and operating savings accounts, easy KYC. I think the advent of Aadhaar will clearly make KYC easier. Opening and operating savings account, the advent of, I would say, low-cost devices, connectivity, straight-to processing, the ability to capture an image on that device, transmit it back, I think is already making opening that savings account easy. Smart cards, if you have heard of the company Fino, almost every card they issue is a smart card. So I think clearly this is already happening. We need to drive it further. Point of sale machines are going to be all over the country, and in several instances, if we eliminate cash, that device can then be used for virtually as a surrogate for a bank branch. A very low cost branch, because I don't think the banking industry can afford to open 600,000 branches in 600,000 villages, even if I assume one bank branch per village, unless you make it into a very efficient branch, maybe a 2% branch in less than, say, 150 square feet of space, so that you are low on cost, because the ticket size is going to be small, the transaction costs need to be kept low, your margins are going to be small. So if you have to break even and make reasonable return, you need to work on that low-cost branch. Similarly, you will need to look at low-cost ATMs. It's a tough one, because you will probably find that the cost, it is not the cost of the ATM which will matter, but the cost of servicing that ATM. Stuffing it with Money, stuffing it with other service material, I think is going to be the challenge that we'll have to face. And of course, mobile phones or a device that is in your pocket clearly is going to be the one that you will look for in the future to do your banking through channel innovation. Smart cards clearly have simplified data capture. I think this is on us. Along with Aadhaar, I think this is going to be clearly the way forward if we are to meet this challenge of 700 million people. Branch in a box already also with us. It is, I would say, not a point of sale terminal. It is not a computer. It is something in between. It is more like a handheld device, but as all the functionalities of what a few years back would have been a full-fledged computer comes at a fraction of the cost. Instead of the three-level redundancies that you built into your ATMs, has a GPRS connectivity, can use low bandwidth, a completely different device from what 10 years back I struggled to roll out 1,000 ATMs in a year. I think you can roll out this in the millions with nobody sweating, because nothing is required. You basically take it and you switch it on and it starts working on day one. So a whole lot of things possible with what I'd call a branch in a box mindset, as it were. And the big driver, I believe that this needs to happen to make this all this possible. Now, will it be impossible without this? No, it's not going to be impossible without this. I think as a banker, I'll say life will be much easier with the Aadhaar. Because the bugbear of the KYC otherwise will always remain. Whether you have the customer gaming you or somewhere you are slipping and making a mistake, I think both should be eliminated. Of course, I'm sure the clever, in quotes, customer is going to find some ways to try to beat the system. Nobody has so far that I know of, but we were again discussing, Mr. Murthy and I, that the fraudster also is just one step behind. At times, I like to believe the fraudster is one step ahead. So but this is required to make things more robust in that context. I think the big thing that I see happening as a nation is direct transfers of subsidy. I'm happy that that is the language that is being talked of very clearly by the finance minister. That's the language being talked of by Nandan, and indeed that's the language that has been talked of by the Prime Minister. I think we need clearly direct transfers of subsidies to eliminate waste and fraud that is already happening in the system in the name of subsidy transfers. And I'm sure that in the next 2 years, given the technological progress that's made, people who are beneficiaries of subsidies will have the ability to go and get this benefit directly posted into their bank account. So two things are happening: the bank accounts are being opened, and subsidy transfers are starting to happen. Narega is the first one where we are seeing there is resistance, because you know why there is resistance. There is resistance because there is theft, and the thief doesn't want to let go. So you have in between hands which ought not to be collecting this. So straight through, and the government knows it, straight through will eliminate all these payments. Cashless payments through mobile wallets, and in several instances is already happening, particularly for health services. Payments have become cashless. I think as we go along, a whole lot of other things will become, will pass on into what I call a payment ecosystem, which is cashless. And of course, account histories from electronic transactions for data-driven lending. Again, something of a policy matter that this institution can certainly work on, because this to me is a huge opportunity. How do you manage your data? How do you use it for good, common good, your customers' good, and economic good, as it were? Customer engagement through branches, through ATMs, through online channels, acquisition and onboarding of customer. Again, as I said, straight through today, handheld device with the products that address the needs of diverse sets of customers. Strong distribution backing products, checks and balances built into that distribution. I was talking to somebody yesterday who was explaining to me that he has seen in nearby countries, basically a financial services salesperson being tracked on GPS to exactly know where he is, what is he doing, and what is the completion of transaction that is done, so that you eliminate a false report in terms of sales, or don't acknowledge something that you've done with your customers. So everything is tracked real time, real location. So far real time was known, real location was not known. So clearly the whole issue of distribution and backing your products, I think, is changing, or your mindset can change with the technology giving you new levers, as it were. Development of new channels by leveraging technology, and consistency in experience across channels. I think this is what the customer will ask as we go along, that I need to get the same experience from my service provider, in this case a bank, across any of the channels that I deal with this bank. Of course, the other thing that I see is customer engagement through his or her life cycle, and as I said, the consistency of experience, our ability to analyze, that is analytics, to understand and address customer needs across these segments, and clearly looking at banking history for underbanked and unbanked customers for providing cost-effective credit. Because inclusive banking, the first step we are talking of enabling the customer to open an account and get his savings in so that he can save. But clearly, very quickly, we'll have to, as banks, get onto the bandwagon of lending to this customer. How do you provide credit? And make sure that credit is something that will come back to you once you have given it, once you have lent it out. I think a whole lot of exciting things. Each one of these areas that I try to put in a bullet, we can speak for 15 to 20 minutes. I was delighted last time I was here that the governor picked just payments and put one single bullet on the screen and eloquently talked about it for 15, 20 minutes. And there was so much that I learned, and I'm sure each one of us learned, on that single subject as we talked on that bullet. And similarly, I think each bullet that I would have put down here is the matter of a subject. But of course, we need to work within a time constraint, and I had set myself about 30-35 minutes for this chat here today. And I thought I will take you through basically, in my mind, what has happened over the last 15 years. That is, technology has transformed clearly banks globally, and more so in India in a dramatic way. And second point that I keep repeating is technology adoption by Indian consumers is proceeding at a dramatic pace, and the customer is ahead of the curve. We as banks need to acknowledge this as we go along. Three, clearly we as a country have transformed and will continue to transform even more in the years ahead. That was a slide comparing us with China and trying to say we are not all that behind, and given our pace of growth, we will continue to grow and in a healthy manner. Then the point that technological innovation in India will lead the way for innovation in banking. I try to put in context what all is simultaneously happening around the world. There is no lead time. Whatever is available anywhere in the world, the next day is available in India. So clearly, Indian companies, including banks, are willing to embrace technology. The customer is willing to embrace technology and get along and go forward. And we will, as banks, move on to the bottom of the pyramid, the 600 million or 700 million people who are unbanked as the next horizon, using all these technology levers as we go ahead. I think I would once again thank Professor Sambamurthy for giving me this opportunity to share a few of my thoughts at this institution in particular. I might have shared some of these thoughts elsewhere, but at this institution in particular, because I believe that without the pioneering work done by this institution, I do not think that at least we in ICICI Bank would have been able to do a fraction of what we did. And consequently, if all this had not happened, I would not have been here to talk to you people and share what was made possible by the pioneering efforts of some of you are here and some of you led this institution in the years past. Again, thank you for this opportunity.